Simon, you're muted again. Good morning, everybody. Well, afternoon now. We'll be getting started with Rocket Lab's earning any moment.
Good afternoon, everyone. Today is Wednesday, August the 17th, and welcome to 7 Investing Live. This is our live stream event we host every Monday, Wednesday, and Friday, typically at 10 a.m. Eastern Time, to discuss and put a spotlight on several of the stock market's most intriguing opportunities. We do switch it up from time to time, again, just to keep you on your toes, a little bit later filming here, and I hope that my technical difficulties are now resolved. My name is Simon Erickson. I am the founder and CEO of 7 Investing. I'm joined by Heather Horton. Heather, I hope you can hear me okay. I hope that you're also having a lovely Monday morning here on August 17th.
I can hear you. And yeah, it's been a great day. I am so ready for fall, though.
As long as I can get the day of the week correct and the time of our filming correct, we're going to be just fine. Today's show is going to be a fun one because we're going to talk about Rocket Lab, RKLB, for anyone who follows along with this popular stock. It's one that has been taking off here in recent years. It's one that has been doing a lot of interesting things lately, and it's nice to just catch up on what they're talking about every quarter that they report. We just got the second quarter results. We're going to do some familiar things and then some unfamiliar things on this show. Again, just to mix it up a little bit and keep everyone on their toes, we're going to start by actually going right through the investor slide deck to see how an investor should look at these announcements as you're getting the PR and you're getting the announcements from the company itself. Then we're going to, after we look through those a little bit, I'm going to take a couple of the nuggets, the informational nuggets that are really interesting, and plug them into what I do as a professional investor, which is build a valuation model for Rocket Lab. Take out the pieces that are interesting, look at a little bit at what's changed, see what they reported, and how that's going to impact ultimately what the price target is for a company like this, for a stock like Rocket Lab. So we're going to kind of go through the whole process a little bit, from a bird's eye view of how do you look at an investor slide deck, how do you use that to quantitatively come up with an objective price target, and then ultimately what we'll have by the end of the next show that we film here is, are Rocket Lab shares a good price today? We're going to incorporate all that together to ultimately answer the buy versus hold versus sell decision and what should we do with this stock. So we're going to jump right in. Let's look at Rocket Lab's second quarter results. I'm going to share my screen here. And this is the investor update we just got. Second quarter 2026 comes out with the investor update. It's Adam and it's Peter that are out there talking about how great this second quarter results were. Look at all the record and all-time high languages that are right up there in the first slide that they report, right? $234 million in quarterly record in revenue during the second quarter, up 62% year over year. $581 million in space systems forward contracts across the second quarter, and then also for future quarters as well. This is a backlog they have of future bookings. They have $437 million in launch contracts. That's not just for building the satellites like Space Systems was, but actually for launching them and getting them into outer space. And then overall, when you put everything together for all quarters, the total backlog that they have across all divisions right now is $2.36 billion. They booked more than $800 million of new bookings within the quarter as well. After the quarter, as well. And then the big news was the Iridium acquisition. We're going to talk about that one in just a moment, but let's look at a couple of the new things that they announced. The space applications, this is one that the Rocket Lab has always had kind of two divisions that have been very popular. One was launch, right? It had a space pad. It had a launch pad. You could actually get someone else's satellites into outer space in exactly the orbital plane that you wanted them to be at. This was always kind of the most popular, most recognizable, most understandable part of the vision, launch. They also have a space systems division, which was where they could actually build your satellites and all the components necessary for it as well. Not just the payloads itself, but perhaps the power modules, the positioning modules for them, the things that were necessary to keep the satellites operational out in outer space as well. They could build all that for you too, and then they could launch it. But more recently, we've been talking about this new third division of the company with zero revenues thus far, but was always key to the future strategy that they called space applications. Maybe customers wanted to do business in outer space, but they didn't necessarily want to launch their own satellites. And they didn't want to pay Rocket Lab to build a satellite for them as well. They just wanted to have kind of this pay as you go model, similar to cloud computing infrastructure, where you could pay on a monthly or quarter or annual basis to have Rocket Lab take care of all the infrastructure and you just focus on running the business, totally operational. And so Rocket Lab, even several years ago, developed the concept of space applications where they said, hey, we're going to take care of all the infrastructure for outer space. All you need to do is pay us for what you're going to be using in terms of the space applications. And they think this is going to be key for the space economy. There was always something lacking, though, that the business never had in place that they needed to truly get space applications to be revenue generating. You had the ability to launch rockets into outer space. You had the ability to build the payload and the infrastructure and the satellites themselves. What you didn't have was the constellations and the spectrum that was available to do those operations. And so what Rocket Lab did in the most recent quarter was they acquired a company called Iridium that had spectrum available and a constellation already available to enable this new division called Space Applications. And you can see this is kind of, as Rocket Lab's own language, saying it's combining their own launch capability and satellite manufacturing capabilities with Iridium's global satellite communication network and their spectrum. So that's what we want to do, right? We started with launch. We wanted to go into building the spacecraft. Now you wanted to have space applications to kind of have this end-to-end space company that Rocket Lab always wanted to build. Now, when you get spectrum, you get approved by the regulatory agencies that be on certain spectrum, certain bands of spectrum that are inherent and necessary for the operations that you wanted to do. You go out, you can apply for that every year. If you wanted to build out your own constellation, it takes time. They have to have reviews for these things. You have to make sure you're not interfering with someone else's spectrum, just like a wireless smartphone provider, a telecom provider, would have to have certain spectrum for your cell phone frequencies that wouldn't interfere with someone else's. Same thing in outer space. And so what Rocket Lab does is it says, we could build this all ourselves. So we could launch our own constellation. We could apply for spectrum, piece by piece out there, frequency by frequency out there. Or we could go out there and we could buy it. And they chose the latter. They chose to buy Iridium because this acquisition is going to accelerate their own development of new space applications that they want to bring on board, right? They think that they can have their own satellites. They're calling them flatelites, which is kind of like Rocket Lab's own standard satellite that it's going to use for operations, but it's going to be using one of the same constellations and the same spectrum that's already out there that Iridium had in place. So this is great. This is kind of like the acceleration of the capabilities and then streamline the deployment, the other operational kind of corporate buzzwords that are necessary for the growth of the business. Space Systems continues to go very, very well. We saw there's some new contracts that they launched. Space Force now has one that's going to be anti-moving target. This is going to be something that's going to be responsive out there to a lot of the things that they're wanting to do. Really need to see them signing a $397 million contract for this one as well. The Airborne Moving Target Indicator program, they've already got the first contract underway with Kepler Communications in support of this. Again, this is going to be using some of Rocket Lab's own developed satellite spacecraft. This is their own satellites that they're building in-house, and then they're going to launch them for part of this contract with the Space Force. Really strong, really cool to see that. Looking at a couple of the other things, or you've got some other contracts that got announced. We don't need to get into all of these. Victus Haste continues to do very, very well. They now had responsive space program where you can not only build the business, or not just build the satellites and the components themselves, complete the commissioning entirely, but then also launch it within a 24-hour notice. This is responsive space for the government. This is why that's so important, because the government wants to have something up there ASAP. You don't want to wait for months to have something done and completed and ready. You don't want to even wait for weeks, and when there's military applications involved, you want it to be in days. And Rocket Lab has certainly shown, in a way that really no one else has been able to show, the ability to create the spacecraft and then launch it in a very, very short amount of time. Just a couple of days from entirely commissioning the spacecraft to actually launching it on Electron into the orbital plane as desired. So this is really cool to see Victus Haste. This is the responsive space program that's done very well. They're expanding into Germany too. That's really something cool. They're getting a foothold into Europe. And then if we look back at the launch side of this as well, we saw a record launch value of new contracts that are already on board. You've got more than 90 launches in backlog, almost all for Electron right now. They got plenty of new launches that were booked here within the second quarter. And then look at this. Yes, we do have more from the Space Force. That's actually not the thing I wanted to look at. I want to look at Neutron now, where you've got more and more development. We see the continued R&D work translating into commercial development of this much larger rocket out there. But you've now got commercial contracts being signed with Neutron as well. We've got one in support of the previous announced contract that they just had. You've actually got 7 customers that have confidentially looking for Rocket Lab to do a commercial launch using, of course, a much larger Neutron rocket as well. And then some defense and some other stuff as well. So I think that overall, we saw a lot of good news from Rocket Lab, not only in record quarterly revenue, but also the forward contracts and the forward bookings and the forward backlog. There's a lot of good stuff going on with the business that translated into some really strong financial results, right? We saw the $234 million of revenue. You can see how that's kind of split. It was a slower quarter. There's only 5 launches. They're in the red of part of the bar graph. There was much more about the space systems for this quarter, and both of those continue to grow admirably. It was a good quarter for Rocket Lab overall. Now, let me take a breath. We went through kind of the deck that they sent out there for investors and said, hey, hoorah, we're doing some cool stuff out here. Here's all the numbers. Here's all the new contracts we've got. Here's all the record level of revenues and all of the good financials that we have to go with it. What do we do with this as investors? Heather, we've talked about this several times, right? We talk about building a discounted cash flow valuation model, but each one of those slides is in its own way kind of an input to this model that we're building. Figure out, at the end of the day, if we're looking at all of this as an investor, retail investor, do we want to buy the shares? Do we not want to buy the shares? And what's a good price to pay for them? So that's what we're going to look for in just a moment. I'm going to cough. Excuse me. Are there any questions? Please go ahead.
Yeah, my major question is, do any of these slides majorly change our past, your past valuation that we went through? And if anyone's looking for that, it's a whole video, 2-parter, but one really breaks down all the numbers with the spreadsheets and everything. And that's a really good one if you're interested in Rocket Lab's valuation.
Yep, and thank you for giving me a moment to catch my breath there. I didn't want to be choking myself on air, but let's go ahead and look at exactly what you're talking about. Perfect segue to talk about what is the next step we take with this, which is the valuation model that we have talked about several times. Here it is, the 12th iteration of the Rocket Lab DCF. You can see we updated it here today. Today's the 17th of August. Every quarter, we get a little bit changed, a little bit updated for the numbers here. But, we kind of look at this on a quarterly basis. But when you're building a DCF, it's really all about what are the future revenues, and more importantly, what are the future cash flows of the business going to look like? And this is not completed here today. We've only updated the second quarter numbers. We have to make some other assumptions about what this is going to do for the long-term business itself. Because the DCF, again, is discounting all of those future cash flows from future years, bringing them back to the present. But I'll tell you one thing that did change, or 2 things that did change. First is we come down here to the backlog of all the programs. We talked about those big new wins that we had in space systems. We saw some of those big contracts that they had signed, whether that was Victus Hayes, whether that was Space Force, whether it was a responsive space program, whether it was the Space Development Agency, whatever it was. We basically, for the fiscal 2026, through the next 5 or 6 years or so, we get assigned an annual value of the backlog of those programs. Right? When you've got something that's worth $397 million, such as the satellites that are built for that AMTI program of the Space Force, I generally assume a 3-year project completion for a new contract that's announced. Could be longer than that, could be 5 years, could be 7 years, could be longer. But generally, Rocket Lab likes to say this is kind of a 3-year program from the time that we start working through the backlog that we've got to the time that we complete the contract for whichever one of our customers it is. And so you can see every time you've got a new program that's announced, whether that's Space Force, you've got some new 18 launches for Space Force Command. We talked about the satellites for the AMTI, things like this. The SDA programs, some of these have been announced every single quarter. We put in the value of these in the backlog, and then we're going to discount the cash flows that result from those back to the present as well. Very important. We can't predict 10 years plus into the future of what contracts are going to look like, right? When Rocket Lab announces a new contract, it's not going to be in the year 2035 or 2040. It's going to be over 2027, 2028, and 2029, maybe 2030. So we kind of put in a fudge factor, if you will, of what can we think or what can we expect the backlog of projects is going to look like. And the way that you can estimate that is, you've kind of got capacity of what Rocket Lab is capable of building in any given year. They add more capabilities. They go out there, they make acquisitions of other companies. They bring in personnel. You tend to see that backlog increasing on a healthy pace as you go out and make acquisitions. And one thing that's worth pointing out, first and foremost, we're at $2.3 billion in backlog here today in the second quarter of 2026. I see that more than doubling by the end of the next fiscal year. By the end of fiscal 2026, early fiscal 2027, I think we're going to be over $5 billion in backlog, just because you see the magnitude of these programs getting larger and Rocket Lab being more and more capable of winning larger contracts with large agencies. So that's the first thing, is look at backlog. We continue to see this growing nicely. The second one that's going to be interesting is going to be this. And notice I've got goose eggs right here, right? There's zeros for the Iridium revenues going forward. Haven't updated this yet, but this is going to be the next thing that we look at in the DCF model. Is Iridium itself did $871 million of revenue in fiscal 2025. That is even larger than what Rocket Lab as an entire business recognized for launch and for space systems. You've got an entirely new revenue line item that's capturing a 57%, basically, let's call it cash flow margin, right? This is earnings before interest and taxes and depreciation, and then also any of those financing costs. It's a little different, but this is a very, very profitable business they've already got in place from these 66 operational satellites that right now are serving telecom customers. Now, Rocket Lab seems to be intent on continuing those existing business lines that Iridium had, but a lot of the satellite capacity and the spectrum that they have available is actually going to be used internally too, for Rocket Lab's own satellites, for its own spectrum that it's going to need for its own space applications revenues. And when I originally built this Rocket Lab DCF, I said I thought space applications was something that was going to come online maybe in 2031, right? It might take 5 years to get the applications for the spectrum, to get all the satellite development completed, to actually start launching satellites into space that you could use as the infrastructure for a pay-as-you-go model for space applications. Similar to Amazon Web Services. Anyone else who's doing the cloud computing or the infrastructure, you pay as you go for the instances that you need for computing rather than building it all entirely yourself. You don't need to buy your own data center for cloud computing. Same thing with Rocket Lab. You don't need to build your own satellites. You don't even need to launch your own satellites. You just say, Rocket Lab, do this for me. And so I think what's going to happen is these numbers here that I originally thought were going to be 2031 and beyond are going to accelerate by probably at least 2 and maybe 3 years. We're probably going to start seeing space applications revenues, in my opinion, by 2028, if not sooner than that. And of course, that's really, really good for a business, because if you can pull those revenues closer to the present, and pull those cash flows to the present as well, you're actually getting a much better valuation for the business as a whole, right? If you are discounting cash flows nearer to the present day, they're going to have a more pronounced impact than if they were happening years and years in the future. Discount rates tend to, they discount cash flows the farther out you get. So if you're getting closer, if you're pulling those, accelerating them closer to the present, they're going to be worth more to the valuation of the business. And so the pencil sharpening for the DCF, which again, we're going to be talking about in the next show coming up here, is what is the impact of Rocket Lab paying 50% equity and 50% cash and this $8 billion acquisition to buy the Iridium spectrum and to buy the existing business that they're already serving? What's the impact of that going to be in terms of the valuation of the business itself? And I don't want to answer that just too soon right now. I want to save that until I've been able to do my homework on this one and give you a really good answer, because I think that it's going to be pretty interesting to see the impact of this business. I'm going to attempt to stop sharing at that point. There we go. And bring it back to you and me, Heather. Again, another check-in on Rocket Lab. Cool business, doing cool things, really neat looking slides. They've really come a long way on their own IR team. But what's the impact of that for investors? It seems like these things that they're doing, they're not just doing them because they're neat developments. They're doing them because they're making the business more valuable itself. And that benefits us as retail investors as well.
Yeah, it's really exciting to see those the income coming in earlier and being realized sooner. That does change things a little bit, especially with the recent drop. We might be closing in on what is a good value and actual stock price.
100%. And acquisitions, we always get excited about acquisitions, but they're not always good, right? The AOL Time Warner acquisition, value destructive. HP, Hewlett Packard Autonomy, value destructive. You can always overpay for a company if you get too excited and then it doesn't play up to the expectations you send your investors. I think Rocket Lab's doing the opposite. I think they're going out and they're buying Iridium for a very attractive price, at least from my first reaction to the announcement on that. We're going to see how they're going to be able to use that spectrum, not just as something they'll get around to, but that they're ready to launch. They're ready to start putting satellite out there into orbit and using this. So when you have an acquisition that's kind of bolt on for an existing business that's ready to go, you can get value out of that much, much more quickly. And that's what I'm excited about.
Looking forward to the full valuation. That'll be a really good show. So, yep, stay tuned for that one.
Yep. And maybe we'll just leave it at that. Another check-in with Rocket Lab. Again, when we looked at kind of the business, we looked at the presentation, you can see the announcements, you can see the record revenues, you can see the top line growth, you can see all the stuff that they're excited about. But at the end of the day, what are the margins you're actually pulling from that? What are the cash flows you're generating for that? We're starting to see kind of this inflection point where Rocket Lab isn't just sinking money into the business to develop Neutron, to get the operations on board, to make acquisitions of personnel. You're starting to see those revenues they're generating from this fall to the bottom line and generating cash flows. And it's those cash flows in a DCF that's so important for us investors. It's going to be an interesting next 6 to 8 quarters when we start seeing Neutron get off the pad and really the turning point of this business we've been waiting for several years.
Yep.
So on that note, I think we'll leave it at that. Thank you, everyone, for tuning in for this one on Rocket Lab. We're going to have a follow-up on the DCF for that one here soon. In the meantime, we're going to be talking again about Upstart and the trade desk here on future shows as well. Appreciate you tuning in every Monday, Wednesday, Friday at 7 Investing Live. Again, normally at 10 o'clock a.m. Eastern Time. We'll see you again on Wednesday this week. Have a great day.